All right, what's up, everybody? Um, good evening. Good evening to you all. It is December 3rd. But yeah, what's up? How we all doing? Hope we had a blessed week. And pretty much this week overall just been insane. But yeah, what's up, everybody? What's up, Nathan? What's up, Bruce? What's up, Chelsea? What's up, Jazz? And everyone else in this webinar right now, and the ones that are just going to join. Let's just wait a couple, I'll say, 1 to 2 minutes, and then we'll go from there. But yeah, what's up, everybody? Joshua, what's up? Chilling, chilling, chilling. Um, just got back in town actually. So yeah, that was earlier today, but yeah, we're back. We're gonna start doing these lives or these live streams, just as usual. And yeah, so hey, I'm back. Good to have you back as well. But yeah, good. What's up, Kadi? What's up, Karen? Hope you had a great weekend. And yeah, it is yeah, it's a brand new, I would say it's gonna be a brand new week, brand new month. And let's just see on how we can close this month and pretty much just Q4 strong. And so let's just say that's like it's honestly been a year, I would say, from us, me, opening Vulture Academy. It's just been a whole journey. And I just want to say thank you for all the supports and, everyone that's, been part of the group or is part of the group at the moment. The support is insane. And I'm going to continue to do what I'm doing. You're going to continue doing what you're doing. And we're just all going to evolve together and see on how we can pretty much just, proceed and just hit that success and just overall greatness, right? And that's just what we're all here for, right? So but yeah, what's up? Let's just see, we have 15 16 people in here. What's up, Wilson? What's up? Yeah, what's up, Zune 111? Yeah, glad to have you here. And yeah, we'll give another 1 to 2 minutes and then we'll start, and then we can get everything kicking. All right. So let me just put the chat on the side. Is this being recorded? Yes, this is. What's good, RZ? Nothing much. Just gonna deliver you a nice webinar as usual. We're pretty much gonna dive into a recap on SPY this week on how you can pretty much part of that on the overall move. Also, if you are confused on SPY, let me know. Was it a certain day that we're confused on? The current structure that you're confused on, the supply and demand zones that didn't work or didn't hold? How would you be a participant of that move and things like that, right? And so again, it's like questions here and there. It's always important. And if you have any questions, throughout this webinar, feel free to throw it on into this chat, right? So what's Zoom user? What's up? What's up to you? Hope you had a great weekend and week. And yeah, tomorrow is a brand new day, brand new week, and we're just gonna pretty much just continue doing what we're doing, right? So can everyone see my screen? The Google browser plus the Discord. Just want to make sure because I might go into this Discord later within this webinar. But yeah, but yeah, can everyone see both screens? Just want to make sure before we proceed to the next step. Yes. Oh, what's up, Bruce? All right, nice, sweet. But yeah, before I get started, did we trade anything? Listen, did we trade a stock? Did we trade Forex? Did we learn a lesson? Did we take a win? Did we take a loss? Did we hit a break even? Did we hit the goal for for the month of previous month? Yeah, how was this week? Was it good to you? Was it bad? Was it nothing? I mean, again, it's like if you are new here, make sure to work within the whole mentorship because that's just what the whole academy is, right? If you did trade SPY, perfect. If you trade anything else, I would say within the stock market exchange, then you could just see the majority of the stocks just went to the upside, right? That goes for Microsoft, Amazon, AFRM, what else? Snap just went insane. Snapchat just been bullish ever since from 3 to 4 weeks ago, right? I believe INT as well. I haven't, I think that, yeah, that did continue. Let me go on to INTC because INTC, actually, that one was kind of, yeah, this one did downtrend a bit, but then picked right back up. But yeah, overall, this was alerted from the live stream right here, which was, let's see, right there, right? All that right there was from the live stream, and you could just see that, each single session break is just one day, right? And that's a different day. And you can just see you had 1, 2, 3, 4, 5 days of just a bullish move. You have 1, 2, 3 of a bearish, a consolidation, and then you have another 1, 2, and 3 of a bullish move to take out the liquidity off of here, right? And so again, everything that you going to learn within this whole, mentorship, Wall Trading Academy course is pretty much just this. Oh, wow, that's just too skinny. So let me just do that there. Yeah. So everything is just here. It's a bullish move, pullback, bullish move, made a new high, come right back down into a supply or demand zone to now take out the next liquidity, which is here, right? And that's just what the whole mentorship is about, right? So it's just basic impulse, right? Retest and then impulse. Okay. And so that's just where the whole IWI stands from, is that you have an impulse move, consolidation phase, and you have another impulse, pull right back down into your given, key level, key range. If that's support resistance, supply and demand zones, if that's EMA, again, you can create a whole system within what I teach, right? And so do you have to go by every, certain rule that I go off of? Of course not, right? So everything here is just, again, push move, pull right back down, break up a structure, makes a new high, comes right back down into a supply or demand zone. But in this case, it's a demand zone because you're expecting price to bounce off a demand zone to continue going right back up to sweep out the next liquidity high, right? And you can see this in all time frames. You can see it on a 1 minute, you can see it on a 5 minute, you can see it on a 30-minute time frame, you can see it on a 1 hour time frame, you can see it on a daily, you can see it on a weekly, and you can see it, on a monthly as well, right? And so let me ask you this: what time frames do you tend to look for this on? Do you look at it at a 1 minute? Do you look at it at a 5 minute? Do you look at it, at a 15-minute, 30-minute, 4 hour, daily, weekly? Yeah. So everyone, what time frame do we, look for this? So Joshua said 1 hour. All right. Lav said higher time frame. But yeah, what time frame though? Like a 1 hour, because the higher time frame it can be honestly a 45-minute, right? It could be a 50-minute, it can be an hour, it can be a 2 hour, it can be a 3 hour, it can be daily, weekly. What was the question? Yeah. So I said, what time frame do you look for this break, retest, and go, right? Based off of, the whole SSE, the break of a structure, the SND zone, the confirmation, and then the next liquidity run. What time frame do you look for that on? Again, there's, your answers can be different from everyone else. That's fine, because, we all trade differently here, right? So daily, all right, cool. Lower time frame, depends on your goal. If you're day trading versus swinging, there you go. Bam. Chelsea said it. So yeah, depends on your goal. If you're day trading versus swinging, then yes, of course. So if you're day trading, you can say, yeah, a 1 minute, right? Or if you're scalping, honestly, you can just say a second time frame, because you can still spot these setups here on a 5-second chart, a 30-second chart, even on a 1-second chart. You can still spot this and get a couple of ticks or a couple of points, and you're done. But you're in that trade for a couple of minutes, right? And so what I would say here is just like, when it comes down to time frames, it all comes down to your trade plan, right? So let me just put this here. So trade, and let me just make this bigger. So let's just put that there. And where did the check go? All right, cool. All right, nice. So let me just put that there. So trade plan, okay? So within your trade plan, you have to ask yourself is, how can I create a trade plan, okay? So it all comes down to how do you want to approach the market, right? How long can you be in this market? So you have to ask yourself, these questions. How long can I, or how long do I have? Um, and so schedule, right? So these two all comes down to, how long can I be in this market? How's your schedule? Let me just put a question mark there because we all have a different schedule, right? And so within different schedule, we could say that, we probably have to go to work at, 10 a.m., okay, or 11 a.m. So when it comes down to that, let's just say that the market opens at 8 a.m. your time or 8:30. Okay. And so if it opens at 8:30, what'll be here is that you have honestly like 2 hours for the market. And so I'll say you only have from 8 a.m. or 8:30, right, which is the market open, to 9, 10, let's just say 10:30. And let's just say our work or our job starts at 11:15 a.m. Let's just say, again, this is all, just an example. And so our job starts at 11:15 a.m. And so we have honestly an hour to trade. So we have 1 hour to 2 hour to trade in this live market. And this all comes down to either scalping or day trading. Okay. So let's put that there. Let me just make this bigger. All right, cool. So again, this just goes for, again, this is an example, or you could have a business, you can, babysit, you could do whatever. Again, everyone's life is different, but this just all comes down to, let's just say a work, right? A job, 9 to 5, right? So 8:30 again to 10:30 is the time that we have for us to trade. And also our job, let's just say job starts at 11:15, right? And again, we're talking about the morning, okay? So we have a 1 hour to 2 hour to trade in the live market, scalping, or day trading. Okay. And so now from there, this is where it comes down to, let me go back down here. Let me just make a new text and let's use this here. So what time frame should I be looking at, right? So again, these are just questions that I was just, looking into my journal the other day. Is that, I had, questions just like this. I said, questions about 9 to 5. How can you be a participant in the market? Should I be scalping? Should I be day trading? What time frame should I be looking at? Or do I need to get second time frames? Do I need to look at the higher time frames? Again, it's all up to you. You have to know how you have to, create a trade plan for yourself. Okay. And so again, this is just where, you have to ask yourself these questions, right? And so again, you're your own boss. You make your own rules. This is just what trading is. Okay. And so I would say a key note is that don't trade when you have, a busy schedule or a busy time, because you might not even look at these markets. Maybe you might just, get into a trade and then just hope for the best, and then boom, you're not even looking at the charts, right? And so again, you have to dedicate or have a certain time dedicated, for you to be part of this market, right? And so let's just say that let's continue. What time frame should I be looking at? So again, that all comes down to your schedule, okay, and the life you live, of course. So the time frame that you should be looking at if you're trying to, let's just say, scalp, okay. So again, you can either scalp or day trade. It's up to you. So scalping, I would say, scalping could be in a trade. So scalping is seconds to minutes of a trade. Day trading is a trade, or you're in a trade from minutes to hours. Okay. So, and that's just what scalping is, just based off, what I go off, right? And so scalping and day trading, again, they're pretty much the same thing, honestly, because you buy and sell. You buy and sell the same day, right? You buy and sell the same day. You're not holding on to position for the next day, you're buying and selling within, the time period, right? Depending on how you're going to go from point A to point B. So again, this is just where, the next steps, as in where you create for yourself, as in where is going to be your entry, where is going to be your exits, where is going to be the exit just in case if price reverses right back, back down on, right? So again, another key note is that every trade that you take, it's not always going to be a win. It could be a win, it could be a break even, it could be a loss. At the end of the day, it's like we really don't know where the hell price can go to. Okay, so this is just where a trade plan, a game plan, plays a whole, or has certain key factors within that, right? Because if we don't have a trade plan and a game plan when it comes down to trading, then why the hell are we approaching the market, right? So, but yeah. So, what time frame should we be looking at? I would say it could be honestly comes down to, let's just say this is what my trade plan is. All right. And just keep it simple. I would say for me, I like to look at the 15-minute. Okay. 15 minutes for context. 5-minute for SND. And then 1 to 3 minute for entries. Okay, just like that. Okay, so let me just make this red. So actually, that's a horrible color. Let's do this here. Let's just find a nice color. I think purple is good. All right, nice. So there you go. Okay, so 15-minute context. What I mean by context is meaning that's what happened from the past, right? Meaning that do I need to have data from yesterday? Do I need to look at and observe last week's? And that all comes down to the trend, right? What is the 15-minute trend? Is it giving me a bullish move? Is it giving me a bearish move? Is it giving me some sort of consolidation, right? And this is just where, again, you come into the market, you observe, you analyze, and just see is it a good time to trade? Let me take some key notes. Where's the market heading to? Is it going up? Is it going down? Is it in a range? And this is just on how you create a game plan. So again, right now we're just talking about a trade plan, meaning that what timeframes do I need to use for the week? What timeframes do I need to use for the day? And things like that. So, but yeah. So now that we have the context, let's just say that we have, this middle one here. Okay. And what does that mean? We see that the market is going in a downward move. Okay. And so we could just say that from Monday, Tuesday, Wednesday, we see what? Something like this. Like that. Okay. And so let me just change that color because let's just do like that. Okay. But are we following all along? I just want to make sure. Can everyone hear me clear? Just want to make sure as well. But yeah, so yes. All right, perfect. Because I want to make sure that I break this down very, clean and simple. And yeah, just for you to rewatch after. All right. So Monday, Tuesday, Wednesday, we see what's an overall downward move. And that is what the context is giving me. All right. So let's just put that there, context. Okay. So let's do that there. Cool. And so let's put a background and let's put a border just like that. And that is what context is. Okay. Is that what is the trend? Okay. What is the story? What is it giving me from, from yesterday, the day before that, the previous week? And so this is just where I come into the market and observe and analyze what is the market giving me? Is it giving me a bullish, bearish, range? What is it, right? And so what I would say here is on Monday through Wednesday, it's a downtrend. Okay? And so now we come into Thursday, and again, I'm following along with this whole trade plan, and I'm trying to create a game plan for Thursday, which is, coming up. It can be the next day. We could just be like, let's say we're doing a quick outlook or analysis the day before, which could be the nighttime, or it can be an hour or two before the market opens. Okay, so let me ask you this: for everyone in this chat, what do you do? Okay, do you analyze? Do you draw out key levels the night before, Or do you do it, 2 hours before the market, hour before the market, 30 minutes before the market, 5 minutes before the market, 1 minute before the market? And hopefully you don't do that. Because if you do, I would say try to do it a little bit earlier. Try to do at least 30 minutes, an hour, and you're good with that. So night before, okay, cool. So night before, an hour before open, nice. 15-minute, 30-minute before, okay, cool. So yeah, again, difference, right? So analyze, yeah, right. We analyze, correct? And again, we analyze differently, meaning that our key levels can be different, our supply and demand zones can be different, but the way that we analyze can be honestly different as well based off the time, right? Because I myself, what I tend to do is like, I already know where pretty much I'm biased on, or my outlook is for the week, for the month on SPY. And that's just where I just focused on the majors, which is my main stocks. Okay. Because the main ones that I trade is just indices, and that goes for US 30, that goes for NAS 100, that goes for SPX. I don't need to just work with time frame. I already know what the higher time frames give me. But since I already know what the higher time frames give me, then I know the whole context on that higher picture. But let me just to see on how can I go lower and analyze even further within a shorter time frame, right? And in this instance, we have what 15, 5-minute, and 1 to 3 minute. Okay, and so again, 15-minute for context, 5-minute to draw out my supply and demand zones, and 1 to 3 minute to look from entries the moment that price comes into my supply and demand zone, or a supply or a demand zone. Okay. Exactly. Only trading SPY for the time being. Of course, focus on 1 to 2, or maybe pick 3 stocks for the week. And that's it, right? And so again, it's very important to create a watch list and just see what the higher time frame is telling you. It does give you a clear picture. If you're confused on anything, then don't trade it. Maybe it's not ready. Maybe it needs more time for the structure to develop, right? So back to this, right? So let's just say Thursday. So Thursday is the day that we're trying to trade. Okay, so now that we have that, right, the context on the 15-minute time frame, it's bearish, right? Monday, Tuesday, Wednesday. Okay, now we know what the 15 minutes is giving us. And so now on Thursday, this is just where price is at. And now you'll be like, RZ, I'm confused. How can I get into this trade? How can I participate in that downward move? How can I look for entries? How can I look for a retest? How, right? And so again, this is just where, questions, it's good to have questions. It's good to be confused, because the more that you see this, occur, and if you apply a strategy or a system and you're going to go off that, then perfect, right? Because you're just going to wait until that, everything from your checklist hits, right? Because if price doesn't hit your supply demand zones, then there's always another move. There's always another trade. Okay. And so this is where discipline comes in place as well, right? Patience. Okay. And so let's just say Wednesday and Thursday, and we know that we're on a 15-minute time frame. So I forgot to put 15-minute here. Okay, cool. So let's just say this is on a 15-minute time frame. So now this is Thursday, and let's just say this is what pre-market. Okay. And now that you have your key levels, or let's just say we didn't even draw our key levels yet, let's just map out where the structure is at. So we have consolidation, impulse move, liquidation, right? This is a whole liquidity grab. This is just where banks displaced price higher, push right back down to see new lows. So if you don't know what displacement is, it's all in the class recordings, and make sure to work with webinar 1 to 38 now, because this is webinar 38, I believe. Yeah, it's 38. So this is webinar 38. And so make sure to work within a whole mentorship for everything here to make sense, right? So Monday, Tuesday, now we have a break of a structure right there. And let me just change the color of that. And so again, this is just on how I look at the market, and how you can as well, and how you can see on how the structure forms, how structure delivers, and how you can create a whole bias, and how can you participate on that move. So high, low, now you have this. Now you have a clear break right there. Where is this low coming from? You can say that this low is coming from where? this last push up before the downward move. Why? Because you can just see that this is just the last area where they displace price higher. It creates what? A mini fault block right there. And you can just see that if I extend that to the right, it taps into this fault block. And what would you call this, everybody? For the OGs, you would say that this is some sort of distribution schematic, right? Because everything here, what's going on in here, it's happening in here as well, right? And so again, the way that we view price and delivery of price is that we view it in Wyckoff concepts or Wyckoff theory, and also Dow. Okay, so now that we have that, we have what? Consolidation, run up, run right back down, new low being put into place. Now you have a new low, shift it right back up to being bullish. Let's just say again, going off structure. But again, even though that price comes right back up to make that bullish move, it comes up to liquidate these early sellers and also to mitigate this higher, supply that sits above, right? And so this is where others calls it inducement, but I don't teach inducement. Why? Because we view it in Wyckoff theory. So again, all those extra terms, chalk, chalky, change of character, whatever, inducements, I don't teach that. You won't hear it in none of my webinars or me explain it really. And all you hear is just pretty much either liquidity grabs or just a distribution or accumulation phases, right? So yeah, it could be either UTAD or UT, okay? So price comes up, mitigating the supply zone, because this is a supply zone again, because the way that you draw a supply and main zones is, again, you grab the last push up before the downward move, right? And so again, let me just make this simple. So let's make that green. I'll write a candle just like that. And let's step there. There you go. Now you have a clean supply and demand zone, just like this. Okay. There you go. The last push up for the downward move, and let's just put that there, and let's just plug it in. There you go. Bullish move. Bearish move. Supply zone. Bingo. This whole time we just put it on a supply zone, right? Because that is just what it is. So push up before the downward move, and you can just see that this whole time it was just rejecting a key level, key zone. And so that is where the whole 5-minute comes into place, right? Because you have this 15-minute context. Now that you have the whole context, now you can find where those supply and demand zones are at, is where they push price up before they sold very aggressive. And we'll look at some good examples, and then we'll proceed, right? So let me just finish going through this. But yeah, so we have our 5-minute SND already based off this one, but now we want to look for the next one, right? And so now that we have the next one, we have it right here. So you see on how this one gave you something like this, a push up, grab the liquidity off of this, and then it sold off. This is just what a displacement is, because this is just where they consolidated, created top side liquidity. And what does retail trade? They trade double tops, right? They trade double tops, they go short, but now banks takes out all those retail traders, takes out liquidity, because again, when it comes down to retail patterns, double highs, double lows is just liquidity being created from who? Banks. So again, they create these structural moves for a reason, okay? Because they're we consider them as a composite man. So if you're working within the whole mentorship, you're going to see me speak about this whole composite man person. You might be like, who the hell is this composite man person? It's just we just call it one person that has trillions and trillions of dollars that creates movements in the markets, and all they're doing is just playing around, meaning that they just buy and sell, but they at the end they make profit, right? Big profits, millions, billions. Okay, so push up for the downward move. You could just see that this right here break structure, right? And again, this is just what we like to see, and this is what creates a a strong supply and demand zone, because it swept out liquidity. Price comes right back up to retest. And why does it retest? Can anyone tell me why does price retest? I just want to see, as in, just want to test your knowledge as of now. And also for, the new ones that's, part of Ball Trading Academy, or just, part of this whole mentorship again, this will all make sense when you work with every single module, subsections, and also the whole class reportings, because module 1 through 3 is just 20-30% of the mentorship, but the whole rest of the mentorship is where you're going to find it in the class reportings, which is the Sunday night classes. Okay. So there you go. Imbalances, fill in imbalances to fill orders that didn't get filled at the level due to the impulse move. So there you go. If you want to write that down as a note, is to fill the orders that didn't get filled at the level to the impulse move, right? So let me just write that down as a note. So there. And let me just put that there. Okay, cool. Right here. So that is just what the answer is, because Joshua is just one of my previous mentees, and he's now an OG member of Wall Trading Academy. But this is just what the whole definition is, as in why does price retest into a supply zone, and this is just why you see price comes into the supply zone is to fill orders that didn't get filled at the level due to the impulse move. And where did that impulse move come from? It started from this high to this low. So again, it's all about reading the price action, which I say PA, and on how price is delivered. How did it leave imbalances? How did it leave behind liquidity? How can we expect a retest into that key level or into that key zone? And now that's just where we can create, a supply or demand zone. And that's just where you see a retest to come into that supply zone to now run right back down to the downside. Okay. And that's just where you see here, entry there to go short. Again, that is fine. There's nothing wrong with that. Now that price comes up again in here, we're not going to say that this is bullish because we're still part of this bearish move, push up before the downward move, because it's just where the protected high is at. And if you look into what was it in trade talk, I speak about what the protect the highs, protect the lows. I answer questions about someone's charts, what I think about those charts. And if you have certain questions when it comes down to your live trades or before the market opens, feel free to throw it on the trade talk, and just let me know, and I'll answer that the best I can. And yeah, so but yeah, so you have twice of a rejection of the supply zone, comes right back down, and now we have what new structure to play with, because now this right here doesn't really matter no more, because now we made a new low, because now that you see here is what happened in here as well. We have a liquidity graph. So this is its own distribution schematic. And so now that we have its own distribution schematic, this is a strong supply zone. So now that you have that, this is a new vol block. So again, you'll learn more about vol blocks and why vol blocks is pretty much a powerful tool or powerful way to apply into your system to look for or to look at structure, to look at supply and demand zones, and to overall look for confirmation, because you can just use these boxes to do all three, which is context, SND, and entries. All right. But again, we'll look at that in a few. And so now that we have that whole break, now that you have this new low, where did that low come from? It came from this whole buy to sell, right? And that's just what it is. So you have this whole buy to sell, and we could just put in a, this here as well. So again, everything here, you're going to view it as a buy order. And that's just on how sells or supply zone creates is a buy and then to a sell, right? So you have a buy to a sell, grab the liquidity off of this, and now makes this new low, right? Where is this low coming from? This low, it's coming from this high, right? You could say it's this high here, right? But honestly, it's this high, because this is the high, as in this is the last orders that they came in to sell to confirm this break. And now this low, it's coming from its own mini supply zone in here. Again, don't get me wrong, that is valid, but don't get lost if price comes all the way back up on Thursday, just like this, and then it sells off just like that, right? Because now you have what? Liquidity just like this, okay? And this is on how retail creates a trend line like that. They trade that breakout, and what happens? They get liquidated and they get stopped out. Does anyone see that when it comes down to the trading, when they draw trend lines, when they try to go for that breakout, it goes for the break, consolidates, and now it just runs right back down again, just due to context, just due to the trend, just due to the 15-minute time frame or whatever time frame that you're on, right? And so again, that's just where price comes in. But you can just see that it's like this whole vol block held right there, and this whole time it was just trading within a supply zone. right there, just like this. And so this whole time, it's a supply zone. So again, there's multiple ways or multiple areas to participate in a supply zone. There is traders in here, look for shorts. They got a nice +1. There's traders in here using its own mini supply zone 2.0s to go for shorts. Again, +1. Price comes all the way back up into these areas in here. That does not mean, oh yeah, we're going to change our bias right away, because we're still part of the supply area, because it's just where the last liquidation was. And you can just see that now you have more ways to enter here to look for sells, right? And again, all we're doing here is to fill in imbalances and to liquidate, sellers or buyers in this market, because that's just what the composite man does. And that's where, who we want to follow. Okay. And again, this all comes down to how to create a trade plan and how to create a game plan as well for, for your scalps and for your day trades. So again, just to keep it simple, everything here is just this, retest and go to the downside again on your destination, right? But yeah, it can be complex because you're just learning, right? And so again, it's like if you're new into this mentorship, if you're new to this academy, make sure to work with every single module, subsection. And I'll say that if you dedicate, your time into this, I would say just study, and educating yourself for 6 months without any live trades. I'll guarantee you, you're going to see a difference. All right, you're going to see a difference. There's going to be no losses. All you're doing here is just absorbing all the sauce, all the knowledge, everything that we're going off of, right? And so again, I know it's good to be in this live markets. I know it's we might need some money here and there, but again, all we're doing here is just building the whole skill, okay? Because skill is what pays. It's what pays us, and that's that, okay? So make sure to remind yourself that skill does not happen, or getting a skill, or receiving a skill, or building a skill does not happen overnight. Does not happen within the next week. Does not happen within a month. Okay, but I'll say that if you dedicate your 6 months of just learning and learning and learning, and now you dedicate another 2 to 3 months of just applying, and there you go. Now you're going to test certain things that works, and you're going to see what doesn't work. And then from there, that's just where you're creating your whole system within yourself. And then from there, you're going to save your whole time. You're going to save your whole money. Because if we just participate with the market, try to make money, then that can be pretty much a big issue, right? So in the long run, maybe in the short term, you might see profits, but now in the long run, you might be asking yourself, why the hell am I not consistent? Why am I blowing accounts? Or why am I up 1 week, down the other week? Or I'm up within the 2 weeks of the brand new month, and now the last 2 weeks I just blew my whole accounts, and this whole month didn't mean shit, right? So, and this is just where you can give up and this and that, but again, I don't want anyone to give up, because everything here you can get it down, right? So again, it all takes time. It's all when it comes down to what works for you, what does not. And again, if you have any questions about certain things, always feel free to send me a DM, or let me know in the chat talk or in the trade talk, and I'll be happy to answer your questions. Okay. Thanks. I'll put in the 6 months. There you go. We have a member saying that they'll put the 6 months in, right? So again, we all want to see the green. We all want to see profits. We all want to make money. But again, if you really, want to do this, if you really want to have get the success, then I would say that put your time into it. Dedicate yourself at least an hour, right? An hour of your day of you're just watching the video, or let's just say on Monday it's educating yourself, and then on Tuesday it's us applying on what we learned on Monday, right? And then now we do it on Wednesday. And now we do it the same thing on Thursday. Is that Wednesday we watch a new video. Thursday is now we apply, right? And again, this is your whole learning phase. So we all learn differently. Okay. So again, you're part of this mentorship. You're part of this this academy. You did the easy part. You did pay, but now the second part is where it's kind of difficult, right? Why? Because it's like it really depends on how bad you want this, or do you really want to do this in the long run, right? But yeah, so That's why you waited for a retest, right? Yeah. So again, there's multiple ways to participate in the supply zone. So there could be once, there could be twice, there could be 3 times, there could be 4 times. It really depends. Sometimes price might just go into the supply zone once, it just sells off right back down, right? Or price might come into a supply zone a couple of times before selling off right back down. So again, this is just where it comes down to finding good setups, good entries, and things like that. That does not mean, oh yeah, the moment that price comes into a zone, let's just fucking trade. Let's just get into a put and go for it, right? So again, this is where the last step comes, or it's just very important is that your confirmation part. Okay. But yeah. So that's just where your 1 to 2, 3 minute entry comes in, right? And so since you already have the 15-minute context in, now you have this new low Thursday, you see a major move to the upside. And let's just say that this was, let's say right here is where the market opened, right? And so now that you have this whole market running up at 9:30 a.m. or 8:30 a.m., right, which is here, and let's just say we're going off of Central Time. Is anyone here in Central Time? But yeah, Central Time right there. And let's just say this is Central Time right here, okay? And again, this is pre-market and this is the market open. And then from here, you have a crazy impulse move at 8:30 a.m. Central Time. Again, that is just where, you look at price and you're like, oh my gosh, this shit is going crazy. This is going crazy. Let's get into a trade because now I see higher high, higher low, higher high, higher low, because you will see it, on a 1 minute or a 5 minute, right? Because again, this is still a 15-minute chart, let's just say. But now in a 1 minute, 3 minute, you're looking for what? Trades, but you're going against as in what your analysis was the night before or yesterday, the day before, okay? And now you broke every single rule, right, in the book. And now that you get into that trade, you're up $100, you're up $200, you're up $500. But now when price comes right back down, okay, cool, it's just a retest. It's going right back up. Let me draw a new demand zone in here. This is the demand zone go up. Let me add in more positions. Comes right back up, sells off right back down, and now you're in a bigger loss, right? And so and now that you zoom out, like, damn, this whole time it was in a supply zone because now I zoomed back out on the 15-minute time frame, and so I went against my, the bias I was on, right? Or that was, biased in. It was to look for shorts, right? Has anyone here made that mistake? Because me as as a mentor, me as a trader, I've done mistakes like that as well. Tons of times, right? Tons of times. So again, everything that you're going through at the moment is what I went through, right? And so, but yeah. And now that you see a price just falling right back down to the face of earth again, you're like, damn, I missed the whole move. And now you get somewhere down, let's just say here. Now you're looking for a trade. Price just does something like this. And now that you get into that trade for a put, price just reverses right back down, right back up on you. Why? Because maybe it's to fill in those orders in here, right? And so now from there, this is just where it can be, very hectic because now you're over trading, revenge trading, emotional trading because you miss this whole move in here. Again, dopamine, FOMO, all those things can pretty much affect you when it comes down to this, right? Because again, we're just thinking about the money. Remember, you're just thinking about the money, but remove the money part. What you want to focus on is the trade setup, right? The trade setup, because again, this is just where, smart money, banks, the big people, the whales, they want you to lead you into a loss, right? They want your money. This is just where they test the fuck out of you. So, so make sure to have patience, to have discipline, and just to have, or just play that whole waiting game. And so again, there can be a whole day of no trades. And we mark out Monday, there was no trade at all. Again, being in a trade is a skill. Again, I'm gonna repeat that again. You, as yourself, not being in a trade is a skill itself, right? Monday, let's just say no trade. Let's just go on our diary or notebook, whatever. Monday, let's just say December 4th, because tomorrow is December 4th. And we're going to mark out an X. Why? Because we didn't see anything from our checklist. So there's no trade at all, right? Now, Tuesday, we mark it out the same thing, right? No trade. And that all comes down to, remember, how long can you be in this market and what your schedule, can get you into, right? And so again, we only have what, 1 to 2 hours to be in this market to look for a scalp and to look for a day trade, right? And so now within those 2 hours, we didn't see anything. And remember, we have to respect that, because anything outside of this time schedule is we're busy, or we're busy, right? And again, if you're busy, that's okay, right? Again, if you have a business going on, if you have to babysit, if you have study session, go do that. Okay, go do that, because this is the only time that you yourself have to trade, right? So, but yeah, again, that is very important, because that is just, things that I don't see mentors or anything out there, speaking about. But again, that is, it's very crucial. Okay. So anything outside of this time period or this time frame is that I would say you're not going to look at this market. And let's say you have a job, right? And let's say that you get into 11:15, 1 p.m. or 2 p.m. You see, news drop, the Discord is fucking popping, whatever. You see everyone going crazy on a certain stock. You go into that trade, and now, again, you're not following your rules. You're going against them. Okay. Because again, it's like there's infinite amount of setups, there's an infinite amount of trades out there. Okay. Because let's just say from out of Monday through Friday, within this whole schedule that you have here, right, from 8:30 to 10:30, with 1 hour, 2 hour, for you to be able to be a participant of the market, is that you can only have one trade, one A1 setup trade within that 5 market days. Okay. And that whole one setup, again, does not matter if it's a profit of $5, a profit of $20, a profit of $50. You're up. Congratulate yourself. Round of applause, right? Because again, $5 is something, $20 is something, $50 is something. This is what's very important, because now that all you're doing here is just learning and learning and learning, and you're gaining, again, you're gaining the experience. Okay, you're gaining the experience because this could be your first year, right? The first year of just collecting this little pack of $5, $20, $50 here, and that could be your first year. The second year can be times 3 this, right? That can be, $200. That can be $800. That can be $1,000. And again, this is your second year. So sorry for me, writing within, on the side of each text, but hopefully we're following along, because I ran out of room. But yeah, this is the first year, second year, and now think about your third year, right? Your third year of 2K, 6K, 10K, and again, within 1 year, 2 year, 3 year, you're building your skill, you're building experience, and you're building everything else that plays key roles and key factors within your whole trading skills, your trading system, and things like that, right? I overexposed myself to the market, trying to get more out of less trades. Yeah. And so again, you have to, remind yourself things like this, because it's very important. Because again, we're not going to, become rich overnight. We're not going to be, copping the Lambo next month. We're not going to be copping the Lambo next year. It could be, maybe you could, right? Never limit yourself. But again, for you to learn a skill, it's going to take time. It really depends on how fast you learn, or depends on how you learn, or how quick you learn, and also how much time can you put into this, this whole trading game, right? So everyone's different. Okay. So if you have a 9 to 5, maybe you only have an hour or two to learn, right? Or an hour or two to, a free time. And that's just where we're going to dedicate ourselves, to learning, applying, and, and then from there, now we got the whole skill set, or, the whole education. Now we know what to do when it comes down to a chart, right? And we're not going to be confused, because if you're confused as in, oh, is, is this bullish or is this bearish? Should I still be in this trade? Should I exit? Should I hold on? Is it the right time to enter? Is it the right time to exit? Should I hold on to this move? What do you, this and that is like, you have to know, yourself, right? And this, again, all comes down to a trade plan and a game plan. And because we might have different risks, right? Or risks. So, but yeah, let me just delete all that. So let me delete all this though. But yeah, are we loving this webinar though? I mean, again, I'll say that I improve with every single webinar. I improve as a mentor. I improve as a trader. And again, I'm always trying to improve as in the things that I do. So let me delete that. Let's see. Yeah, and again, I take notes. I see what others were struggling in, and as well as I ask myself, what was I struggling with when it came down to me as a beginner, or as me, in that bubble, and I just needed that burst, right? And so I look back into my notes when I used to do mentorships with students. Okay, but yeah, so now on this one, but yeah, very helpful. Round of applause. Yeah, thank you. Thank you. Just want to make sure that this is all clear. And again, if you have any questions, I'm here. Right. If you don't have any questions, but if you are rewatching this, webinar video, then you can ask me anytime. All right. And that's just where, as a mentor myself is, where you can reach me is in Discord or in the chat or in the PM. Okay. So now that we have Thursday, again, this is just where, the new level comes in. And now let's just say this is Friday, right? And so we already have Thursday come to the supply zone, and now we're trying to look for a trade on Friday, right? And so this is Friday, and now you have this low. Where is this low coming from? Again, it all comes from the last push up for the downward move. And so there's different ways to draw a supply zone here. You could draw a supply zone from here to here to make that that low where it calls. But honestly, the whole low or this low came from this high. But look at the buy order from here to here. So when you look at supply and demand zones, you can look at it different ways. You can look at it in a big institutional format, as in this whole bullish candle just like this. And you can just see on how much more bigger this is from the little mini ones that we had in here, right? And so now this was a big buy order, again, from a bank. But why do they put in those big buy orders? Is to mitigate their orders that they had from the past, right? Or from previously. So now they have this from here to here. What is this? From this high to this low, is that you see a downtrend. And so we can just, put on a text real quick. This is a buy order, because everything that you see in this chart is a buy or a sell position, okay? So this is a buy order. If you see the market going up just like this, it's a buy order. And if you see the market going down from this high to this low, then that would be this, just like that. And let me just make this red, and boom. So you have a buy order and a sell order. And this is where, this whole vol block comes in place, just like this, okay? So we grab this low to this high that made this new low. And what can we do? For the OGs that have been part of this mentorship or have been working within the whole mentorship, what can we do within this vol block here? Or we can just say, what can we do within the supply zone here if we have it from here to here? Much appreciated. I got about 10 minutes before I have, I have to get off. Are we still going to go over the chart? I DM you? Yeah, but that will be later on within this webinar. If not, then you can watch the recording of this, or I'll just answer it to you in the DM after I finish this. All right. But yeah, I got you though. Don't worry. Refine. Yeah, we're gonna refine, right? 50%, 50%. Cool, thanks. Yeah, no problem. So let me put that there. So fib retracement. So within the fib retracement, fib retracement is just where we're grabbing the 50%, because the way that we grab these 50%, Fibonacci's, is that when it comes down to those 50% marks, is that we expect that this is an area where a key level sits at for price to start, running right back down, because it's just where banks want to mitigate their whole buy position of that bullish move. So we slice that bullish move in half within the 50% mark, and now we draw a zone there, right? And now from there, you can grab nice entries, sniper entries to go short, right? And so that right there is a key area to look for sells. Yeah, I can go a little bit above, consolidate a bit, and then sell off right back down, right? And so again, that's all pretty much in module 2 and also in class recordings, all right? So how to draw that Fibonacci tool is that go on Fib here, just like that. Yours might be like a rainbow color, but if you can change that as well. So let's just say you have that drawn out, double click it, and this is just what the my settings are: the 0, 0.5, and the 1. Okay, so I mean I can delete the 0 and the 1, but it looks very, it just shows you this. So I'll just say put on the 0, put on the 1, and you can see you'll have all three, because this high and this low, or this, the top one, the 1 and the 0 would pretty much just measure the bullish candle, right, from the high and the low of it. So it's from here to here, that's it. And now why do we say the 50% of it, or why, is that a key level? Is just pretty much is that when it comes down to things like that, that's just an easy route. So let's just say that's the easiest way to pretty much map out a refinement. Okay, so just like this, and you can just see that the way that we turn this supply zone just like this is we mitigate just like this, and we just make it much more narrowed. And so we don't grab the whole buy candle, we grab the 50% of it, and there you go. It leads you into that supply zone, because now you're not confusing yourself as in, is it this one? Is it this one? Is it this one? Is it this one? It'll be this one right there, right? And so that right there would be a nice area to look for sells. And also, when you work down with lower time frames or other time frames, there can be a nice zone in here at that 50% mark that's unmitigated, and it'll be a valid zone. And that's just why I say it's like you could do it either manually, just like what I just explained, or you could just do the easiest routes, or just the easiest way is just draw out that Fibonacci, do the whole 50%, map out that key level, and look for confirmation there to look for shorts, right? So again, it's up to you. But for me, I like to read price, I like to read the story, and I want to see why is it here? Okay, why is it here? And why is this a key level? And is it here or is it here? Okay, and so to look for this. But overall, we're biased on the same thing, is to look for shorts. And this is where it comes down to the 15, the 5-minute SND, 5-minute SND, which is a supply zone. And now the 1 through 3 minute is where we're going to look for entries here or here. But we're just going on a lower time frame though. So it's like we're working with the 15, the 5-minute, and the 1 to 3. Okay, because that's just what you're, the time frames that you're using. Okay, so but yeah, that's just on how you get into a trade, how you can approach a move just based off a break, retest, and the next liquidity run, which is here, right? Which is this one. Okay. Any videos on how we should set up trading view? I would say I really don't have a I would say like a step-by-step video on how to set up trading view. But I would say if you want, you can honestly bring that question into my DM, and I can make a short video of it, or if not, I can pretty much explain it on the next live stream, and we'll go from there. But yeah, so yeah, any videos on how we should set up trading view? I mean, if you have any certain questions about it on how to set it up, just let me know as well, and we can also do that as well if you want to. But yeah, so for the Fibonacci, for example, that you just did, would stop loss be at 0? Yeah, so it could be at 0, or it could be just based off on structure, meaning that if your supply zone is here, so let me just delete all these drawings. So good question. So honestly, perfect question. So yeah, let's just say your Fibonacci was here, lays right here at the 50%, a supply zone is there. I don't think that your supply or your stop loss would be at the 0 mark if it was from here to here, because that's too far out, right? again, that's me. Because again, your stop loss, it all comes down to the amount of, your risk. So from here, oops. So from here, with a stop loss here, just like this, I would just say it's too big, it's too wide. So when it comes down to things like this, is that I would draw the next imbalance, which is here, which is this, because we can honestly have a supply zone here as well, right? And so your stop loss would be honestly either here or maybe the imbalance that lays inside of here as well, which is above it. So it could be like that, right? So you can just see this like your risk is very less, but your reward is bigger, right? Because everything in blue is what you're going to make money off of, right? So, um, so from here to here, right? If you're right about this move, then you make 1K. But if you're wrong about this, certain zone or this certain setup and price just does this, then you just lose what, $100, right? 100, 150, 200, right? But you see on how your reward is bigger than your potential loss. And that, again, it all comes down to either if you want to go off structure, but within structure, you have what, certain things, as in, again, a game plan before you into a trade, because you're going to ask yourself, is it really worth for me to have a stop loss above 0, right? So again, it all comes down to your risks, okay? So, but yeah, let me just remove that real quick. And let's just look at a charts explaining more about this. All right. So what time is it? Still 8:01. All right, cool. So are we good on this though? Are we good on this whole thing here? Because this is just what we went over for an hour. We went over for an hour. So, all right, nice. So let's just delete that. And again, if you want to rewatch this, then the recording will be published tomorrow. All right. So let's delete this just like that. And let's look at some good examples on how that break and retest and the next liquidity run at a, or how can you look at it at a certain time frame, and how you can pretty much a participant in any single area. Doesn't really matter. It really depends on how you view price within the time period that you're in, and how long can you be in a move, right? Or how long can you be looking at these charts, all right? So let's just say that, let's go back on SPY, and let's just go into the 15-minute time frame, just like the way that we're looking at, right? And so what was Monday? Can anyone give me what day was Monday? So let me see, Thursday. Actually, we can see here. Wednesday, Thursday, Tuesday, Monday. All right, cool. So there you go, right? And so just like I mentioned, when it came down to the beginning of the week, I would say look for something that looks clear, right? Look for something that gives you a clear trend, not something that's, bullish, bearish, bullish, bearish, bullish, bearish, bullish, bearish, but until it picks a move. So I would say the moment that price picks a move either from a break here or a break here, then we have, a move going on, a move being delivered, right? But before that, we're already biased on a 1 hour, right? Biased in on a bullish move or a bullish, continuation. Because on a 1 hour, you can just see that it's holding on to the EMAs, it's giving you bullish structural moves, and that's just what we want to go off of, right? Which is that bullish rally. Yeah, you can go short-term bearish here and there, but on a higher time frame, it's just yelling at you that it just wants to continue going along, right? Yeah, there's nothing wrong with going bearish especially on a lower time frame, because that's just what I would believe. It's honestly the right thing to do. Is if you're on a 1 minute or second time frame, you can make money on those sell moves from here to here, right? Or from here to here. Everything that marking out from or within those sell positions, they're valid to go short from here to here, from here to here, whereas from here to here, from here to here. So those are what? 1, 2, 3. So there's like, yeah, 1, 2, 3, 4, 5, about a 5 to 6, potential trades to look for shorts, to look for puts. right? And that can be either a scalp or that can be a day trade, because if you swung that, then there could be a chance that you would have been stopped out, right? Pre-market or post-market, whichever, right? So when it comes down to things like this, look at the trends, right? And so since I already, know what SPY is giving me on a higher time frame, for this instance, this is a 1 hour, or it could be a 4 hour daily, we can all say it's bullish. But now when we go into a 15-minute time frame, that's just where some of us can remove ourselves from that bullish move, right? Or the bias that we pretty much had from that higher time frame. So let me just delete that real quick. And so let's just go back onto Monday. Where was Monday? Monday was the 27th. All right, cool. So on Monday, so let me delete this. So on Monday, we're pretty much what? Gap down. Yeah, gap down. And then from that gap down, you can just see it pretty much just what? Created more liquidity. So from the far left, I mean, you can go from, days back and just see how did price, held, and how did price continue going up, right? And so again, it's like, if I'm on Monday, right? If I'm on Monday and I'm looking at this trade, it's like, I'm not going to just map out, random areas or random zones. I want to see what happened the previous week. So this is where it comes down to analyze, right? Analyze and map out your key levels, your key zones, your key structure, whatever, right? So you want to come into analyze. You're not just going to come and wake up and let's just make money, okay? So when it comes down to things like this, I can go up an upper time frame. If you want to squeeze out the noise, then you go up the upper time frame. But I would say let's just stay stuck with this 15-minute time frame. Yeah, this is very ugly. Yeah, it went kind of bearish for a bit, but it's still from a bullish move, right? From this high to this low. And again, from here to here is a vol block, right? Because if I just drew on, from here, a vol block right there, the last down push before the upper move. And again, what is a vol block? You may ask. It's just a big supply and demand zone, right? So from here to here, liquidation, right? So again, this is the opposite of what I explained earlier. Push up, come right back down, push up again, right? Right there. Push up, come right back down, push up, right? You see how simple that is? So again, you can draw these vol blocks to confirm structure. You can draw these vol blocks to confirm supply and demand zones. You can use these vol blocks to confirm, entries. Because let's just say if we're on this 15-minute time frame, you can honestly use the institutional structure from here to here, because all this is this a consolidation, a break, a retest, and a continuation, right? And so again, from here to make a new high, we expect now this new vol block to hold, right? Just like that. So let me just put that there. Let me just clone this, because again, none of this really matters until we touch that one area again. If we zoom out, look, if I just extend this to the right, this whole time it held that vol block, right? And so it's just been bullish and bullish and bullish, and it just keeps on tapping and tapping into those vol blocks. And that's just on how we confirm order flow, and for us to continue within a move. So how many times did it test in here? Just once or twice before it just saw another rally. This high came from where? The last down push before the upper move. But again, what can we do with this vol block? We can grab on a 50% mark from this high to this low. Bang, right there. Look at this 50% mark. This can be a nice key area, key zone. Boom. From here to here, that would have been just one move, and you would have been done for the day, for the week, right? And that's Tuesday. Because again, it's like, if you made money from here to here and none of from Wednesday, Thursday, Friday look good to you, all you need is from here or maybe to here, and you made $1 million. Again, it all depends as in how much you're putting into that trade, right? How much are you willing to put in that trade, or how much can you, okay? Or you're able to, okay? It all comes down to your risk, how you're looking at the trade, how you're gonna go from point A to point B, and things like that. So again, these vol blocks, these VBs, these 50% marks, or these levels, it's it's something that you can use, right? But for me, do I do it that way? I used to back then, but along within this whole mentorship, you're gonna learn more about the way that I develop as a trader, the way that I change certain things, because now at the moment I use EMAs, right? I use EMAs for this whole stock, exchange markets. All right. And EMAs has just been plain wonderful. Okay. So again, everything that you're going to learn within this whole mentorship is you're going to learn different tools, different things that you can start applying or using and create a whole system within yourself. Right. And again, all you're doing here is just you building as a trader, and you're just learning yourself. That's all you're doing. You're learning yourself as a trader. You're seeing how, what's going to work, what doesn't, and how you can start applying, certain things, because there are still some members that does things like this and it works out, best for them. But for me, for myself, maybe I found something much more simple that's just much more easier for me. And that just, I don't need to do all that extra stuff. Or maybe I would say the simple thing that I would call it can be something difficult for someone else, right? Does anyone agree on that one? Because let's just say the way that you confirm, the way that you look at something, it can be, difficult for me, right? And again, we're all different. We're all different humans or human beings, right? The way that we look at the market can be different. Maybe this whole, you can have a whole system just based off, vault block, 50% fib, and timeframes, and we use Wyckoff for entries. And that can be, sorry for the handwriting. So this is just one single system that I just made up, right? Or not made up, but again, this is just a one system as someone can use. So vault block for structure, 50% of a fib to map out what? Their SND, and their time frame that they use, and also their confirmation is Wyckoff, right? So this is just one system, okay? And so again, when you work with this whole mentorship, you're going to find a system that works for you. This is why it's very important to, do 6 months of just learning, with also applying as well, and see what works and what does not, right? But you're learning the whole SSE methodology, all right? And again, this is just going to help you to learn more about yourself as a day trader, as a scalper, and a swing trader, right? And so again, that's just where it comes down to, creating a whole system for yourself, okay? Because maybe the way that this system, made you money on, on Monday, right? Made you, tons of money, right? But maybe the system that I used on that particular move that you were looking at, let's just say we're looking at the same stock, and you apply this system, or maybe, yeah. So let's just say that if you apply this system on that stock and you found a nice move, perfect, you made money. But maybe the system that I used on the same, stock that we're looking at, I didn't see any trade off the system that I'm looking at. Maybe my system, let's just say this is you. This is your system. And this is my system, let's say. So my system would be structure. And then within structure would be EMAs. And now I'll pretty much be fractal breaks. So sorry for my handwriting again. So this is structure, this is EMAs, and this is fractal breaks. All right, so again, sorry for my handwriting, bear with me. And just based off this system, my system, I didn't make any money, but you did, right? Because the system that I used and applied on that stock, or on the same stock that we're looking at, it didn't pretty much, help me find a move, right? And so again, that's fine. So this is where it comes down to, we can come and approach it a different way, right? And so, but yeah, did that make sense though? Was that confusing? Yeah, so this one would be structure, impulse move, tap down into an EMA, just like that. And I use for a structural break in here, and I enter here, right? And I go long, right? Because I'm using a EMA bounce. I'm using that EMA as an SND zone, and I'm using a fractal break off a lower high to look for that move, right? And so that's just my system, okay? So, but yeah, hopefully, that made sense though, okay? So let me delete that though. Let's do that there. And let's just pretty much just continue with this here. So what was it, Monday? So yeah, Monday, let me delete that though. Do you wait for a retest on the EMA? Yes, of course. So wait for a retest on the EMAs, and then I use, my confirmations. I just want the EMAs to cross. All right. So, but yeah, again, those EMAs are going to be pretty much, it's going to be a retest. All right, into those EMAs to look for a bounce. Okay. So this was what, Monday? Yeah, Monday, we can pretty much just map out the structure, right, together as well. And let's just see as in how we can come into analyze price and go from there. So this was Monday. Let's just go back and just go and map out where those protected highs and protected lows are at. So where is this high coming from? Again, we're off a 15-minute time frame. It's coming from here, right there. So none of this is a break. None of this is a break. This is a break, okay? Because the body closed below this line here. Because this wick, it closes above the range still. Because this is a low, again, displacements, webinar 19, I believe, that made this new high, comes right back down, and it's still bullish. So it's still bullish here, and now went bearish here because the candle closed below this low. And there you go. On Monday, you had a nice, one break of a structure on a 15-minute time frame to go short. And you can just see that there is Wyckoff in here, of course. Or you don't even have to learn Wyckoff. You can go off fractals. This high came from this low. Fault block. Came right back down, made this new low. Retest the 50% of this. Went short, right? So that would be the 50% of that. So again, and again, I'm still talking about the system that if you had that one system I just spoke about minutes ago, the 50% of this low to this high. And let me just delete that and I'll show you that it retested pretty much in that 50% mark. Let's just make that perfect. Where'd it go? Did I delete it? I think I did. Where'd it go? 50%. So your 50% can be from here to here. And there you go. So delete that. Delete this drawing right there. 50% work, right? And now your zone, right? Your new zone, or actually your current zone would have been right. Where's my box? Your zone would have been like this. And you're like, that's too big. Refine it like this. And now you have a nice zone in here. And again, this is a 15-minute time frame. And now, if this is a 15-minute time frame, this can be a 5-minute zone, right? And you can, see more about that zone on a 5-minute time frame. But now your entries can be here on a 1 to 3 minute. Does that make sense for everyone? As in how we just spot a nice trade in here, just based off 15-minute breaks of structure, how that price just broke below a displacement or a protected low, and how it created a nice zone for us to trade off of, the one that price just broke this, right? Because everything in here, right? So let me just show you. Oops, the wrong tool. From here to here, everything in here, it's untradeable, because it's just very, very, very choppy, right? So you can just see that we're still holding this low. Still, there's still no confirmation of this break until we have this break. So we have this push up before the downward move has been confirmed. Price creates a zone, right? A zone here. Comes into that zone, sells off right back down, right? And there you go. And you can just say, also, I could draw another fib if I want to, from this low to this high. And there you go. Even within this whole vault block from here to here, if you're struggling to find a zone, look at this 50% mark right here. Look at that. There's a zone right here. And this is just a zone that we're looking at, right? Because we're looking at where did this low come from? Came from the last push up before the downward move. Came back up into that zone, met the next liquidity run right here. And now you see that happened on Monday, now happened on Tuesday, right? Boom. So now, if I zoom out, now that right there was a good move to go right back down to the downside. But again, if we zoom out, we're still holding this high to this low. So remember, you have to know the ranges that you're working with. Okay. So yeah, structure can be very confusing, but again, if you take the time to hit every single module and also every single class reporting, you're going to look at structure differently. All right, because structure is pretty much is something that's just where honestly can be very confusing, can be very hectic, and but I pretty much broke it down the best way as possible using these vault blocks, and also teaching you more about ranges and how you structure as well, right? Based off those recordings or those class recordings. All right. So so even though that this went technically bearish, now we found out where this low coming from. It came from this high. And again, the moment that price breaks this new low, then we're technically, it creates a new range. So we're going to draw a new vol block because we're going to follow within their current lows. This low is what made this high here. And so let's just delete everything now. So hopefully everyone is following along, because again, this can be pretty much confusing at first. But once you rewatch this with part of the other videos, this will all make sense. All right. So again, all we're doing here is drawing out these vol blocks, but we're confirming the actual structure that's pulling right back down. Right. So let me just put it in with the path tool. This high that made this low, that made this high, that made this low. Right. And let's just turn it black. Right. So let's just like that. Let's just make it thicker, just like that. Cool. So now that we have that, this low is the last low that came from this high, right? And so now that I would have that, we have now a clear break right here, okay? And so now with that clear break, what happened, right? Now we have technically this went bullish again, right? From here to here. So you can see that when I draw out these vol blocks, it's pretty much supply zones. And remember, the way that we draw supply zones is the last push up before the downward move. So you grab the bullish move. But now since we draw demand zones, it's the down push before the upper move, which is the bearish, sell from here to here that made this new high, right? Because honestly, this new low or this low here is what made this high here, if that makes sense. Because again, if you go on a higher time frame, this would just be one high, one low, one high, one low, and move up again. Okay. So again, if you have any questions, feel free to let me know in the chat. All right. But let me just make this here. So again, each time frame is different, but each time frame plays a role within each other to create a picture, to create a story. All right. High to this low, to this high, to this low, to the new high again. Right. And again, this whole, let's just say that this one was, let's say that this blue one, or actually that's a very neon type of color. So let's just put that there. So let's just actually remove the EMAs real quick because yeah, it's just too much color. All right. So, I mean, let's just try a different color. I mean, we can do purple. Oh yeah, this one's good. So let's just do this here. And again, I just want to make sure that this is all, making sense. And I'm just doing the best as I can. And let's say this is a 1 hour. Okay, cool. So the purple is a 1 hour, and the black would be the 15-minute time frame. Okay. There you go. So the purple is the 1 hour structure, the 1 hour story. The 15-minute is the black, right? And again, this is just me breaking down SPY, as I promised in the announcements. So 1 hour and the 15-minute time frame. And so from there, what do you have? 15-minute time frame is just now giving you what? Bearish move, lower low, lower high, lower low. And now that this low made this new high here. So this went bullish. And so let's put that there and let's just make it green, just like that. So the greens and the reds, so the reds is supply zones and the greens are demand zones. Just keep it simple. All right. But if you look back into from here to here, it's just a whole green. So this whole time, we're just trading in the green zone, right? But if you look at this bearish move, it's just to retest the orders inside of this green demand zone, right? So yeah, there is money still inside of this demand zone, but this is where, liquidation comes, in motion, in place, right? Or in play. And so now that we have a bearish move pulling right back down, okay, cool. Yeah, it's bearish, bearish, bearish. Again, 15-minute time frame. This was from last week, so the previous weeks, Wednesday, Thursday, or yeah, Wednesday, or actually there was a holiday on Thursday, Friday, because that was Thanksgiving, Monday, Tuesday, and now look at mid-Tuesday, shifted right back up to being bullish. All right. And so now that we have the moment that price breaks above this green zone, there you go, a bullish move, right there. Okay. So now let's follow along within what we have there. So now that we have that, this is bullish, bullish. And what happened here? Broke structure. Okay, cool. This high is coming from where? A demand zone down here. This was a nice valid area to go long because it gave you what? A break, a retest, and the next liquidity run in here, right? And now that we have this high is coming from where? This whole, I would say, let's look at the pullback. The pullback is coming from right here, right? So again, let me just put that there. So this is just where this high is coming from this candle in here, just based off displacement. And that's the protected low, right? And so since the moment that price breaks below this, it's technically now bearish, all right? Because now you have a higher high, higher low, higher high. It's coming from down here. And yes, you had demand zone here. And look at this. It went technically bullish here. But what is all this? Can anyone tell me what type of structure this is if you've been part of this whole mentorship? What type of structure this is the moment that price just came very sharp into that demand zone and now it's pulling back just like that? What would you call this? What type of structure? It starts with that I. Anyone? Any volunteers? Intermediary, right? Intermediary structure. Because you're now within that whole rundown, you have new structure in here that's coming right back down to being bearish. Because this high has its own context, has its own story on a 1 minute time frame. Because now you have lower low, lower high, lower low, lower high, lower low. This low is coming from a supply zone in here, right there. And look at this, came to a supply zone nicely on Thursday, sold off, right? And now within that sell-off, it came to mitigate more of this bullish vol block, which is a bigger demand zone. So again, vol block is a demand zone, right? But we could just put it into these format to not be confused, all right? Because yes, this high that came from this low come from the institutional structure, right? Because now that we have that, it's technically pulling right back down and then going right back up to being bullish. So we have the red vol blocks indicating that it's bearish, the green ones indicating that it's bullish again. And at the moment that price breaks below this zone, it's technically bearish again. But we're still part of this bigger green demand zone. So again, make sure to work with every single module and other subsections of the mentorship. And all this right here will make sense. All right. So now let's just zoom in. And we can pretty much just see on how we pretty much confirm that one, the outlook that I pretty much called out into the on Friday morning, right? Thursday to Friday morning. So again, just like I mentioned, the moment that price breaks below this, it's bearish. And remember, where do we want to see, where did that bearish move come from? So let's put that there, and let's just delete all this, noise, and let's just put that there with a, just like that. Okay, cool. And so the moment that price breaks below this low or these lows is coming from where? It's coming from this high in here. That's just where you see me draw out that one line here, right? Because I have this as a bullish move, right? Because this is a BOS. And this high is coming from where? It's coming from here, right? Institutionally, okay? And so with that institutional move from here to here, right? This is technically bullish. And let me just make this transparent. Just like that. And there you go. This is a vol block. And let me just see if I can change this. Okay, cool. All right, nice. So that's a vol block. So let me delete that though. So can I delete this? There you go, vol block. Okay. So everything inside of this vol block is valid for us to buy or to look for buys. All right. And so now within that candlestick structure, we have what? Intermediate bullish, intermediate bullish. Yeah, this wick can be bullish as well, or this could be a break. But on the 15-minute time frame, that wouldn't be a break, right? For you, right? Now they have this new high that pull right back up. So you can say that this is what has its own legs from higher high, higher low, higher high, came right back down into here. This was what technically bearish, right? But if you look at its overall demand zone, its overall context, this is a 1 hour demand zone, right? Don't forget that 1 hour demand zone. But with that 1 hour demand zone, you have confirmations again to go back up again. Just as in what you had in here from the far left, you're going to approach it the same way, is because all we're doing inside this 1 hour demand zone is to look for buys, is to look for longs. That's all we're doing, right? And so now you have the moment in here from Thursday's context or from Thursday's picture. You confirmed it in post-market, pre-market, and now you know what to pretty much expect for Friday is to look for longs because this has been broken. Because you can see that with the moment that this broke, this was technically bearish, but now it shifted right back up to being bullish. Okay, and now from there, this high is coming from where? Down here, pretty much, right? But now if you follow along with candlestick structure, we have higher high, higher low, right? Higher high, higher low, higher high, and this is just where you see me say BOS. And again, that's fine, right? But now from there, this low made this lower high, made this lower low, shifted bullish. Does everyone see that shift right there? Let me just put on a new vol block in here. There you go. The moment that price broke above, this was a nice confirmation to now start looking for long. And this is why I said that you had a demand zone in here, and also a mini, or actually a mini. So this was demand zone alone, and also in here is that there could be a creation of a mini demand zone in here to look for buys. So just to keep it simple, you had this that confirmed bearish. So let's say it was BOS. Now that you have that, you had this impulse move, just like this. This higher high is coming from where? This low. But again, when you look at other time frames, you're going to have little spikes, little wicks, like this. And even though that price goes bearish one time, that does not mean, oh yeah, it's fucking bearish, let's go short. Because this whole time we're still trading it within that 1 hour demand zone. Because now, since that is what it is on this on this break, we're going to consider this as some sort of reaccumulation models, right? Because while others are going to approach this as a chalky, flippy, whatever, we're going to approach it as a absorption, which is a liquidity grab, to look for the move up again, right? Because others are looking for shorts, we're looking for longs. Why? Because again, context, the vol blocks, the order flow, the liquidity being generated, liquidity that's been swept, and how we pretty much consider this as some sort of fake move, liquidation, and now we can create its own SnD zones in here to go long. And that's what it did in here for news. Push up, push right back down, rallied up to the upside, and there you go. Look at this. It's now bullish, right? So does anyone have any questions on this one? On how pretty much SPY played out from Thursday to Friday, and that's just on how it played out, right? Because it was either come to that zone in here to fly right back up, or create a nice mini demand zone in here to trade alpha to go long, right? But yeah, and you can just see that if I zoom out, we're still holding that purple structure, right? And let me just make this on a 1 hour just to show you that just pretty much here, high came right back down to the main zone and just bounced off. And so again, everything in here is just bullish, 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 bullish. And so this is what a whole reaccumulation model is. And that's just what happened on Intel, right? So if you look at SPYs, just pretty much I would say it's kind of like difficult at first to look at, but it's just pretty much the same thing as we've seen on INTC, which was down here, right? So you can look back into INTC from, if you want to take a notes of this. It was from Tuesday, the 7th of November to the 14th of November. All right. So you can just see on how much cleaner this looks than SPY, but they're both the same thing. But again, when it comes down to, look at the markets and analyze, you're going to see that they're not always going to look, the same exact way, right? But it's going to look something similar, right? And so again, the dates are, if you want to look back into that and study, right? So again, it's very important to study. Let me just find the date. It's, yeah, Tuesday, November 7th to November 14th. Yes, yeah, they're both Wyckoff. They're reaccumulation models. It's just a weak hand to strong hand transfer. So all this is just pretty much what? Liquidity grabs. Yeah, this can be pretty much a distribution being in motion, but just based off the continuations, just based off the trends, we're going to consider this as a reaccumulation model because we have that, we have this, that, right? Because when you look at an accumulation, it's like this, it comes from a downtrend. But when you look at a reaccumulation, it's coming from an uptrend, right? And it's just where other Wyckoff, learners or wherever they learn Wyckoff from is that they're going to start forcing distributions out of nowhere, out the blue. Who knows why? But in this one, we're going to consider this as reaccumulation. Why? Because it's just bullish, just based off structure, right? So bullish, bullish. So again, each accumulation schematics has its own, again, phase and also its own, liquidation as well. But when it comes down to that, it's just generating liquidity and sweeping out liquidity to look for the next move, right? Because just what I mentioned here, I think this was, bullish, bullish, bullish. This was bearish, as you can just see that this was a protected low, or actually this was a protected low, actually. And now that right there is just the new low came from what? The push up before the downward move. And again, this is just where you would yourself, as in, what you can do here. There you go, 50% mark. Again, you can have a nice sell to go look for shorts. It did take out the liquidity here, ran right back up, but don't be confused on why, because it's just a reaccumulation, right? So, but yeah, that would have been a vol block from here to here, right? 50% of it, go short. There you go. If you played puts on that one, perfect. If not, if you went for calls, that went, even better. Okay. So again, study November 7th and November 14th, and just see on how you can compare that with SPY, right? And so again, that's just on how you can, learn more about continuations, trends, and things like that, right? So, but yeah, so let's just see. Yeah, but that was nice because this was what? Run up, run down, break, right? That was a break above this high, right? And within that high, came right back down to test the fall block in here. Okay, 50% of it again. There's a nice zone in here. Yeah. So again, tons and tons of things to learn here in this academy. Make sure to study up, make sure to hit those modules. And if you have any questions along the way, make sure to send me a DM. And also, I would say, I think someone did message me. And also, when you message me, if I don't see it, it's just due to it's probably hidden in my message request because I just checked my message request. And I see there are some, members that asked me a question, but that asked me, I would say like yesterday, a week ago. And I'm sorry about that. But if I don't answer a message, it's probably in the hidden inbox. And make sure to just tag me in the chat. If you do have a question, be like, hey, RZ, can you check your DM? You can bug me all you want and, until I message you back. All right. And so again, your questions is very important. I want to make sure to answer them the best, way as possible. But before we, close out this, with tonight's class, there is also someone's chart that we have here that want me to go off of, and we can pretty much just, go off of that. And yeah, so can everyone see this stuff? Just want to make sure before I pretty much just hit this. Yeah, so let's see. This is AUD USD. Okay, cool. So AUD USD. All right, nice. So I have to use this zoom tool. All right. Okay, cool. So since this is 15-minute time frame, again, doesn't really matter the time frame because again, the time frames in the market does not really exist. What exists is the orders behind it. That is what exists, and that's just what we trade off of. Again, I'm going to repeat that again, is what we trade is the orders within the movements of these banks. That's what it is. All right. And so honestly, what I would say here is we can follow along from left to right, because that is what is very important for us to do, is to start from the left side and just see on how price just, continued, right? And so what I can do here is just pretty much, I would say, let me just just to pretty much delete that, and let's just say we don't even know what the hell this time frame is. All right, because again, the time frame in this market does not exist. What exists is the orders, and we trade the orders, not the time frame. All right, so let me fit there. All right, cool. So from left to right, we have, yeah, I mean, there could have been a protected low in here, but let's just continue. We have higher high, right? This higher high is coming from where? From this low. So we can follow along higher high, higher low, higher high, higher low, higher high, low, equal lows in here, right? This is a low that made this new high, but again, equal lows left behind. So this would have been liquidity here. This high. So actually, let me just try to change that color because I don't like that color. Is there a way to change that color? Okay, cool. Is that better? No. Yeah, I guess that's fine. Yeah, so higher high, came right back down, liquidated. All right, cool. This is now the protected low, right? This is the protected low that made this impulse move. All right, higher high. So everything here, if you look at the wicks, has already been mitigated within each single, previous candle. So there's no really imbalance there. So again, when it comes down to imbalance, it has to be an open area. It has to be an open area that there has been no mitigation, right? And so again, these wicks and these candlesticks pretty much, can create a story for yourself, right? So higher high made this new low. The moment that price breaks above, right here, it's bullish. Not this wick, not this wick, it's this body, right? And where's this body coming from, right? This body is coming from these lows in here. They're all equal. And that's just where he or she, or actually, yeah, he, put liquidity here. And there you go. Price came right back down, swept that liquidity, and there you go. So that right there is an area where banks liquidated, made this new low, came right back up, made this new high, right? Regular structure. So this right here just went bullish, bearish, and then bullish again, right? And again, this can be a daily, this can be a yearly chart, this can be a monthly chart, this can be even a 1 second chart, for all I care, right? So again, doesn't really matter because everything here, what you see is what we can trade off, any time frame, right? Or we can do this in any time frame. And so since this high would be honestly from, would be honestly from here, but it would be this one, honestly. Yeah, it'll be this one because this is just where it made this new high, liquidated this liquidity here, made this pullback, made this whole impulse move. And so that's technically a breakout structure. So this high, it's coming from this low. And if I just extend this line here, it taps in. So this is its own vol block right there. And let me just make that a different color. So let's just make this here. So I don't know if that's, so sorry, bear with me with these tools. This is a vol block, right? Based off the protected low, came right back up into that supply zone, sold off. So this was a sell entry. And so this would not be, all this right here would not be any buys. Why? Because the structure has already shifted here once and here twice, right? So you have two main breaks already, here and here. Because yes, this is still valid as a BOS, but I want to see where's the actual orders that came from the banks that they applied the last buy to sell, right? Because that's just where you can now draw, again, like I said, you could do the easier route, the 50% mark from here to here. And that 50% mark would be right here on the line that I just drew. And there you go. It leads you into that, retest into that area. And so that way right there would have been a 50% fib, rejected right at the 50%. But you can see at the 50%, it leads you into a nice valid zone, into a nice valid default block, right? And so none of these buys made sense. None of this, none of this. It would just, just bearish. Yeah, so I would say all this right here would have been, it's invalid. You're going long in a bearish market or in a bearish move because now banks have decided um, uh, to look for shorts. And again, this is just as in what I have, you know, data in at the moment, because we went off of from here. I really don't know what happened from right here, because now that right there would be something different, right? Because that right there would have been this new low in here, right? Or this could have been a pretended low from a higher time frame, or it could be something from different, right? And so again, this is where it's very important when it comes down to these time frames, as in what you're working with. Because if this is a 15-minute time frame, yeah, you're going to see multiple ways to enter this market, but you have to go from a monthly to a weekly to a daily to an hourly to a minute, just to understand where this is all coming down. Because let's just say if this is a daily time frame, each single candlestick is a daily, and this is a whole year from here to here, right? So let's just say this is a 2019 to 2020, let's just say, for example, right? And so from 2019 to 2020, that's a full year of a downtrend. But if we now go on a higher time frame, this whole time, this was just started from, or actually from here, made this new high, made this new low. Look at this. This is already like what, 2022, right? 2019, 2020, 2022, 2023, right? So you can just see it's like each candle or each buy and sell candle is to create a picture for a different time frame. Because again, it's like, are you really going to wait, let's say, a year or 2 years just for prices to tap into the supply zone to look for sells? Of course not, right? I mean, it's up to you, right? But for me, when it comes down to things like that, are you really going to wait for a year or a couple of years to get into a trade just to, yeah, be right a short-term period and then be wrong? And price does that, because remember, when it comes down to these supply and demand zones, yeah, you might see some movements here and there, but they can just shift right back up on you, right? Or now you get stopped out. And so that is just where from 2019, 2020 to 2022, now you know what 2023 is, right? And again, that's just what it is. This is just where you create structure, right? So again, at the end of the day, we really don't know what can happen. I really can't tell you, oh yeah, this is a supply zone to start seeing new lows. That's what we anticipate, yes, but this can shift at any given moment, right? But yeah, this right here, this right here, this right here was invalid, invalid, invalid. And so the moment that price broke this low right here, this is its own vol block, right? The moment that price breaks below that vol block, where's this low coming from? It's coming from a nice supply zone in here. And we can pretty much just, go even lower and find a new supply zone in here, right? Because now you have miniature vol blocks in here to go off short off, come to the supply zone, go short. So there's a nice entry there to go for it, downward moves, right? We can go short again, lower low, lower high, lower low, lower high, lower low. Yeah, right there. So you're right about this one though. So yeah, I think you had a sell position, but on this one, there's a nice sell position here to go short. It did liquidate off this. That's a nice one. You had another sell position here to go short. That one did pull back, so this would have been a loss. Another high that made this low. Okay, cool. It made the liquidation. This was a protected high. I see why you did that. Came right back up being bullish. So now you have a bullish move. So again, one vol block bullish, second vol block bullish. This high is coming from where? A nice demand zone in here, right there. Boom, long. Another vol block in here. Push right back down to the vol block, a nice demand zone there. Push up, right? Same exact thing, right? Yeah, liquidity here made sense. Reaccumulation models, right? Because there's Wyckoff in here, reaccumulation. So this right here is what accumulation is from a downtrend, and this is what a reaccumulation is from with an uptrend. Does it all make sense for everyone? As in what an accumulation and reaccumulation is, as in what the difference are. They're pretty much the same thing, right? But accumulation comes from a downtrend, reaccumulation comes from a continuation of a trend or a bullish trend. Because each one grabs liquidity, right? It grabs liquidity. So it's this and continues. That's what they both do, right? But yeah, and so price just continued, higher high, higher low. So this higher high comes from, there's no pullback here. So all this right here is just all intermediate, or not intermediate structure, it's just pretty much liquidity. That's why you have pretty much equal highs now here, right? Equal highs. So this high is still coming from down here, right there. So now that price just came here, the moment that price closed below this line here with the body, it's valid for you to now shift right back down to being bearish. But if price comes up and closes above this zone, there's gonna be a nice, free area to now confirm longs for a day's worth, right? To mitigate these supply zones, to either reject right back down or to break above. And this whole thing right here could be honestly a bigger reaccumulation model, right? So, but yeah, that right there is that outlook on that, and hopefully, that makes sense. But yeah, that's it for tonight, everyone. We did, yeah, do a full 2-hour class pretty much for today, or for tonight, and hopefully you enjoyed this webinar. If you did, that's good. And but yeah, if you have any questions more about this, make sure to hit me up, and we'll go from there. So have a good night, everybody. Stay safe, stay blessed, and hope you have a nice upcoming week, and let's kill it. All right. But yeah, good night, everybody, and I'll see you on the live streams on Tuesday, and we'll go from there. All right. All right. Thank you. Thank you. Thank you. All right. Goodbye.